This is my ultimate 15-minute trading strategy, and all you need is 2 lines to catch sniper trades like these every single day. This is a full mini course that will teach you everything about the strategy in less than 40 minutes. Let's begin. So 2 lines equal everything. What does that mean? First of all, we're going to be having the same 2 lines happening at the same time every day, and these are going to be used in order to find our setup. And we're going to focus on the same entry window every day also. So we're going to be focusing on a specific time of the day to draw the 2 lines, and also a specific time of the day in order to find our entry. So we're going to be looking at specific hours only on the chart. And the main goal is to make it repeatable and 100% mechanical. That's going to kind of work on all of the pairs. We're going to be focusing on this later, and it's going to consist of 3 simple steps. So for the pairs, it's going to be mostly working on all of the forex pairs, especially anything that is against the US dollar. So again, euro dollar, pound dollar, Aussie dollar, and all of the other pairs. We're going to be only focusing on one time frame. That is going to be the 15-minute time frame. Now, let me know if on another video you want me to include the 1-minute time frame here in order to have even better entries and higher reward to risk, but that's going to be for another video. And by the way, I have a full book that has all the steps and all the checklists as well as more details. You can have free access to it. The link is in the description. Now, just a note before we continue is that I was able to spot this specific pattern after 7 years of trading and after a lot of backtesting, and I will teach it to you for free today. So let's start with a few concepts that we actually need to understand in order to apply the setup. The first one and the first concept is one that I've talked about a lot. It is the strength and weakness. It's actually something that we can find on the chart all the time. And the core idea is that strength is a sign of continuations or signs of continuation, and it's telling me that price wants to move in the same direction. However, on the other hand, weakness is signs of reversals, and it's telling me that price actually wants to change the direction. And for today's setup, we're going to be focusing on weakness. So we're looking for kind of when prices want to change the direction, we want to trade the reversal, but we're also going to be focusing on safe reversals other than risky ones. Now, strength and weakness can be happening in different forms. So for example, strength can be a candle closure, can be an imbalance creation at a specific level, an engulfing candle, for example. So it could be happening in different forms. Also weakness could be one candle closing and then reversing. It could be a wick, and it could be candles not closing above each other, or candles, only a candle closing with a wick to the previous one. So it can be happening in a lot of forms. We're going to be focusing on one specific form of it. Now, what we see here is that price was actually going lower, made a pullback, and then continued going lower. However, on the continuation here, we have this low. Now, you could consider any key level, but for now, this is the low here. And what happened is price closing aggressively below it. And this is the form of the strength. On the other hand, what we have here is the same price action sequence. So price going lower, going higher. But now, as it's going lower, it actually failed to close below the low, and it only rejected with a wick. So there was a wick here, and price closed like this. This could be any time frame. The strength and weakness concept can be applied to any time frame. What we have here is this rejection. This is actually the weakness, and that's going to be our focus plus the 2 specific lines that we're going to be using. So in short, that means a body closure would be our strength, and a wick rejection would be our weakness. We're going to be focusing on the weakness. Now we go into the second concept that we need to understand is the 2 lines. So 2 lines we're going to be focusing on, and they're going to be time-based lines. That means we're going to draw them not based on price, actually time and price at the same time. So the first one is the 17, and that is an open of a new candle. That's the time where a new candle actually opens. On the EST time, all the timings we're going to be using are EST, so New York time zone, and then the midnight timing. Now there is a third one, an extra line that I'm going to be going over later. It's an optional one, but it could help you a lot, so feel free to apply that one too. But for now, we're going to be focusing on these 2, the 17 and the midnight. Now, how to use them? A quick note before we continue: everything I've learned over the last 7 years, the framework, the system, and how we read the market is taught inside my community, Edge School. That includes the Edge model, the same strategy I use to find those 5-to-1, 10-to-1, and even 20-to-1 reward to risk trades live with the community. If you want to learn my full system, the link is in the description. Let's keep going. So let's understand the two lines. How do you actually draw them? Now we have the 17 candle. So this is the midnight candle, for example. Now when it is bearish, that means this is the time of the 17. We want to focus on two things at the same time, the time and the price. Whenever we have these two things, we're going to be drawing the line. So 17, that means this is the 17 candle. We're going to be looking at the opening price of this candle. Where does this candle open? Because it's a bearish one, that means it opened here and then it started going lower and it closed here. It closed lower, that's why it's a bearish candle. So we're going to be drawing the line here. This is our first line. The second line, and this is another example when it's bullish, for example, and this applies to both candles. Now when it is bullish here, this is the midnight, that means price opens here and then closed here. So the opening price of the midnight is right here. We're going to be drawing these two lines until the next day. So we're going to be drawing these two until the 17. And if you understand this for now, and it's actually very simple, that's why I'm always trying to simplify these strategies for you. You already understand a big part of the strategy for today. Now here's the fun part. Just based on these two lines, we're going to be having the bias or the direction. So you don't actually need to be, to be subjective about the direction. It's actually very mechanical, and we're going to be having specific rules for that. So here we have the stable, that's the price placement relative to the 17 and the midnight open. So these are the two levels that we draw, and then the bias. When price is above both levels, so price has been going up, and here we have the first level and the second level. Exactly here, price is above both lines, and that means we can sell. So the bias is to sell. Now when price is below both, so we have level 1 and level 2, and price went all the way down, started to go higher. So when price is below both, that means we're going to be buying. But we're not going to be buying randomly and blindly. No, we have a specific framework to follow in order to catch that specific price. When price is overextended, when price about to reverse, we're going to be looking for that thing, a specific setup and pattern. Now, when price is in between the levels, that means we have level 1 and level 2, and price is just in between here, doing nothing. We're not going to take any trade. So based on the framework of today, we're not going to take any trade. However, you can actually take trades, but that's going to be for another video. For today's video, we're not going to take no trade. Now we could have a lot of setups. You could have 5 setups, 2 setups, 3 setups, or just 1 setup, or no trade for the day. However, there are 2 high probability potential trades that can happen at a specific time of the day. But before that, let's understand the sessions that we have. Now, the first session is the Asia. That's going to be from 20 to midnight. And then the London session is going to be from 2 to 5. And then the New York is going to be 7 to 10. Now, what types of setups we have, or my personal favorite setups for the day? Trade 1. And it's going to be when London sweeps the Asia higher low. That means Asia ranging first. So something like this. Then London goes above Asia, and then we can sell here. Or below Asia, and we can buy there. So this is trade 1. Now trade 2 is when we have this happening, so London sweeping Asia higher low, then we have a breakout structure on the other side, and then we can have a New York continuation. So that means we already have the direction. Now we're going to blend these specific frameworks with our setup of the day. And that's how we can actually have high probability trades and focusing on quality other than quantity. Now you could take trades even without this framework, but if you want to focus on higher probability trades, then you would do this. Now, the second setup here is going to be something like this. We have Asia ranging, London taking the high, breaking structure on the other side, New York comes here within the same direction here, and we sell here. So that's how it should look. We have Asia here, and we already talked about the timing. Trade 1 is when price goes above the Asia on London, takes the London high. Now we can sell here immediately, but knowing that the timing of this and the profile, so what could happen in relative to the previous session, whenever we know this, we can actually have even higher probability trades. So price on London goes above Asia, started to go lower, we can actually already sell here. Okay, so we're going to be selling here. I'll show you how we go lower. Now whenever on New York we have a breakout structure, price goes lower, we're going to be continuing in the same direction. Now we're going to be spotting weakness here in order to sell more. So these are 2 high probability trades for the day in specific timings. However, you can actually apply the same framework any time of the day inside of these sessions here. But you could take more than 2 trades. So you could have 3 trades here, or 1 trade here, or no trade here and 3 trades here. So it depends on the market volatility. Now let's go over the steps. We have only 3 steps. Very simple. First of all, we mark the 17 and the midnight open prices. That's the first one, and we drag them to the right or something like this. Now we wait for weakness above or below both levels. So make sure to focus on both levels. So when price is in between the levels, we're doing nothing. But when price is above both or below both, that means we have an overextension. We have an opportunity prices away from the mean price. That means we could buy or we could sell, depending if it's above or below. And then we enter with confirmation. And we're going to be talking about confirmation. Okay, so for confirmation, what we need is we're going to be using only one time frame, which is the 15-minute. Bullish weakness candle. That means price is going up and we're closing bullish. So this is a bullish candle, but we close with weakness. Whenever we have this, what we need for our confirmation is something very simple, which is waiting for a bearish candle to close. So we have weakness, and then this is a bullish candle. I just need another bearish candle here, and that's going to be our confirmation. If it's a bearish weakness candle, that means price is going lower, but we close with a wick here. I just need another bullish candle to close. That is my confirmation. So bearish weakness candle, we want to see a bullish candle close. So that's how it looks. Price, we have a high here, which is a key level. This is candle 1, which is the weakness candle. It closed bullish, and we have weakness. Now, because this is a bullish candle and with weakness, the confirmation would be a bearish candle or an opposite color candle. So in this case, it's a bearish. But if here it's bearish, so price took a low and it closes bearish, that means I want to see a bullish candle as my confirmation. So candle 1 is the weakness, candle 2 is the confirmation. Now, in another scenario, what's going to happen is that we could have the confirmation just based on one candle. And when does this happen? When price shows weakness and then flips and closes on the opposite side in just one single candle. How does this look? Something like this. We have a high, a weakness candle, a bullish one could be number 1, and the number 2, I want a bearish candle. But this candle here did 2 things at the same time. So it actually take a high, there was a weakness here, but exactly at the same candle, it flipped bearish. So now we have weakness and opposite closure on the same candle. And this candle here can be also a confirmation by itself. So one candle can be a confirmation as well. Now let's go over some examples and I'll show you the full process and the full system. However, be sure to watch the video until the end because I'll give you 3 tips for even higher probability trades, how to even have higher win rate using the system. So let's go over the examples. Alright, so this is euro dollar here and we're going to be looking at a full week of price action. So this is the previous week and this is the current week here. So we're here now when it comes to the price action. So I wanted to do the previous week and we go over it together step by step, looking at all this potential setups. Now stay tuned for the 3rd level because this is something that I'll go over after the examples because it's an optional one, but it's going to help you a lot, especially if you focus on trading the New York. Now if you trade only London, then you don't need it. Now we're going to be going over this using the replay. First of all, I want to show you how to draw the lines. I'm going to go at 17. So here, this is 17. I'm going to draw a line just to separate the days. So I know this is a new day here and this is 17. We're always using the New York time zone. So these are the daily separators and this is the end of the week. Now I do have this indicator that shows me the session. So this is Asia and this is London and this is New York. I already have a video explaining all my indicators. I'll have that on the description. Now playing the price action. We want the Asia to finish. Now sometimes there is a problem with the indicator. This is Asia here and this is midnight. The first one is I'm going to go to the 17 candle. So the 70 candle was a bearish candle. It opened here the next day. So I'm going to take it all the way to here, somewhere in here. Now I'm going to go also to the midnight candle. So this is the midnight candle. This is where it opened and I'm going to drag it to the right. I'll play the price action and I'll be looking for when price is below both, taking a low. So for example, this is a low, right? If it fails to displace below, now make sure to watch the video until the end because I'll go over the tips and I'll be using some of these. They come from experience when it comes to identifying which high or low is valid, which one is high probability. Now we take this low with weakness and then with confirmation, I'll be looking to buy, for example. So let's wait and I would always love to enter on London. So at 2 a.m., I'd be looking to enter for longs. So price, does it take? Not really. And then let's wait. Now we go slightly above. We do nothing there. Okay. I would be looking for this high. Sometime Asia high is very important. So Asia high is from here to here. This is the highest one. Sometimes there's a problem with the indicator, as I say. So this is Asia high. If we go above it, we're going to be having the first high probability trade. So above Asia, and then we have weakness, we can trade that one. If after that we break structure to the downside, and then we can look for continuation also to the downside. So something like this. Playing the price action, we can see that price went below both lines. Now I'm going to remove this to make the lines visible. So we have the midnight and the 17. Okay, so price goes above. Actually, this could be a valid one. So you could have taken this one. Now, one thing I did not talk about the confirmation. The confirmation is whenever we close bearish here, what I want to do is have a limit order at the 50% of the confirmation candle. So this is the confirmation candle here, right? I'm going to look at the 50% of it. So it's right here. I'm going to have a limit order because when the candle is very strong, it's going to take a lot of the reward to risk. So the entry is going to be something like this: stop loss above the high, entry here at the 50%. And we need to see the retracement within 2 to 3 candles. So, and we don't want to see weakness happening after. So whenever we have weakness here, also below both lines, that means this is not valid. So within 2 to 3 candles or 1 to 3 candles, I want to see the retracement. In this case, we have a valid high being taken with weakness, closing lower, but we did not get the retracement. And then we had weakness on the other side. Now let's take a look at this one. We have what? Weakness. So we took a low that is below both lines. That means we're bullish here and we close bullish. And that means the confirmation is already there. What I'm going to do is take a gap box or fib from the low to the high, and we're going to be focusing on 50%. We're going to have a limit order at the 50%, and then stop loss goes below the low of the weakness candle, not just the confirmation. And then what you can do is either target the next high or target a 3 to 1, fix 3 to 1, or the more you get experience, you would know what levels or what highs and lows to focus on and to target. So this could be one target, this could be another target. So we'll do 3 to 1, FX 3 to 1 for this video. Now playing the price action, we'll notice that we get in there exactly. So sniper entry going higher, and then a bit of a retracement, and then we hit the target. So within, I would say, 1 hour, you hit a target of 3 to 1. Now sometime, what I'll do is I'll always focus on these sessions. So London and New York. But sometime when price is just about 15-minute or 30-minute before the session, or if it's a very high probability high or low being taken, I'll still take it slightly before or in between the sessions. Now prices above both lines, that means we could be selling here only when we take a high with a weakness. So for now there's nothing, and we go lower and going still higher. Okay, so now what do we have? I'm gonna actually go back here, because what do we have is taking a high, going lower, and then this is a weakness and a confirmation candle at the same time. So I'm gonna take a gap box here, and then we will look at an entry at the 50%. And I want the entry to be, you see this one? It happened with a 1 candle, and that's the best one. However, if it takes 2 candles, but we're still in here without having going below both lines, then it's still valid. So let's see. Okay, go higher, and then it gets me in here. I'll be targeting 3 to 1, which is around here, playing the price action, getting there. Also within a 30-minute, only 30-minute to hit that one. Now, what do we have here? We have price below both lines, again, below both, taking a low, and then closing higher. So we have what? So these are 2 trades for the day here that we've taken, and it hits take profit here. Now we have a low being taken, and this is the London low. So now this becomes a bit high probability. So what we'll do after is taking a gap box here. Now sometime if I take 2 trades and they're, winners, I'll stop for the day. But this is also another high probability one. I'll be looking to enter here at the 50% of the confirmation candle, and then targeting 3 to 1. Let's see. Okay, so this was a loser. So for the day, you've gotten 3 to 1 and 3 to 1. That is 6R minus 1. That is 5R for the day. Now price goes lower, and yeah, we have weakness here. but we did not close with a confirmation and then continued lower. So after that, we're done for the day. After New York, I would not trade. Now going to the next day, and I'll go faster now. This is going to take a lot of time. All right, so for this day here, so what we have is midnight open here. This is the opening candle, and then the 17, which is around here. So now price is above both lines already. So I'll be only looking for sells here, and I'll be looking for buys here if it's valid. And whenever price is in between, I'll do nothing. So then session starts, we're going higher, and we have nothing here. So we did not take a high with weakness. Okay, and then we're in between here, so we're doing nothing. Price goes lower. Now we're getting below both levels. This is not gonna be the highest probability one because we've already taken a high, and the best scenario is to have a continuation to the downside from here based on the profiles that I taught you. But let's see what we have. So zooming in, let's see. Price is going lower. Still, the New York session did not start. So okay, we go below a low. We did actually take this low, but we're still not inside of New York session. So New York session starts here, and we're below both, so we're still in between now. All right, so for now, what we have is something a bit interesting. So we have price taking a low, weakness, and then strength. So this is the confirmation candle. I'm gonna take my GAN box from the low to the high. That is my confirmation candle, and I'll have a limit order at the 50%. All right, so 50% is here, and then stop loss below the weakness candle. So in this case, I think price could actually go above this. It's going to take this and maybe reverse. So 3-1 is around here. Playing the price action, I want to see price coming back. So, okay, it did not go above both lines. I think this is still valid here. Let's see. So it goes immediately there, exactly at the 50%. Sniper entry in say 1, and then getting to the target. So how long does this one take? About only 30 minutes. And then it reacts from the midnight open. So, okay, so now we're above both lines. Let's see if we have any weakness. Okay, we have also this high, but we're already outside the session, so we're not trading anymore. Now I'm going to skip to the next day. So for this day, we have one trade that is valid. Now let's mark our levels very quickly. We have opening price, actually 17 is here. That's where it opened. And then midnight open is around here. Okay, London session starting. We're in between. That means we don't trade. Now the best scenario is to sell above the Asia high. Okay, so we did actually have weakness around Asia high, and now we wait for the confirmation. Confirmation is closing lower, but notice the difference here. If we have an entry here without following my suggestion about having a retracement to the 50%, 3-1 is going to be around here. But let's see the difference. I'm going to take my GAN box from here to 50% of the confirmation candle, and the entry is going to be here. Stop loss is the same, and notice where 3-1 is. So this is a big difference here. Now let's see. I'm going to remove this, and we'll have this one. This is the correct position. Price gets in there within about 1 to 3 candles. So 3 candles, sniper entry. Let's see what happened after, and then go into the take profit. I would say it took about 1 hour. Now we're below both lines. But whenever we have this, the reversal, again, this time it happened because we're a bit far away from the levels. In this case, yes, if we have a valid one here, I might take it, but only to look for continuation here to the downside. So this is going to be trade 1. Trade 2 possibly could happen around here. So New York starts going higher. Okay, we did not have weakness, but here we actually have weakness and a strong one. So this is a weakness candle as well as a confirmation at the same time. So 2 things happening at the same time. We're going to take a fib from here to here, selling at the 50%, stop loss above, and then targeting 3-1. 3-1 is around here. Now we're doing fixed reward tables here just to eliminate the emotions and having a mechanical setup. So I want the entry to happen within 1 to 3 candles. So 1 candle. Okay, we get in there exactly. And this is another sniper. So let's see. Okay, a bit of a drawdown, going lower, almost hitting this the take profit, another retracement, and then take profit here. Another huge trade. Now we're done for this day. How many days we have? We have 2 more days. We're gonna go over them quickly just to show you all the possible setups that we have. Okay, so we have Asia here, and let's see until midnight. So midnight is here. I'm gonna mark in the open. So remember, bearish candle at the opening price here, it's gonna be higher. And here we have the 17, opening price is gonna be around here. So we have two lines now. Now, most likely we're gonna be having a bullish scenario because we're overextended from the 17 and midnight here. So when we're below both, we're gonna be buying. And if we start to go higher, we're gonna be selling here. London session starting here, going higher. We're in between. All right, so now, actually, I'm going to go back here. What do we have is something interesting. So we have Asia high, which is the highest probability one. London closes below, confirmation candle. So weakness candle and confirmation candle. Actually, the weakness candle did not take the Asia high. So I would consider this one as the one candle confirmation. It did the weakness as well as the confirmation. Selling at the 50%. This is a concept that you probably did not know about and did not hear it about because, again, this is something I came up with. I've been trading this Asia high fake out for years now, and I was able to spot this specific pattern. So 50% and then 3 to 1 is around here. Now notice how every time we get actually more than 3 to 1. So this one gave 6 to 1, actually 7 to 1. This one gave a maximum of 8 to 1. Now this one gave, so this one was a loser. Okay, so going back to this one, let's see if we give the entry within 1 to 3 candles. So within 1 candle is the best one, and we get there, sniper entry. Let's see, and then immediately going lower, so huge trades. And this one took about 45 minutes. So this is another one. Now we could sell here, but again, the best one would be selling here to look for the continuation because we do have the sweep and the breakup structure. So let's see what happened. We have no weakness. We're in between now, and there is nothing yet, and then price reverses. Okay, so we're above both. If we have a valid setup here, we could take it, but if, okay, so mostly New York is ending, and there is nothing there, so for the rest of the day, we're doing nothing, and there was a potential one, but it's out of the sessions that we trade. Now going into the last day, the 17 open is here, and the midnight open is here. So there was a weakness and confirmation just before London starts. So about 15 minutes before. This could be actually a valid one. I'll take it. I could still take it. Now, you don't need to take it. Okay, 50%. Because I think this is still a high probability one just happening 15 minutes before. Now I'm going to be selling at the 50% of this and then around 3 to 1. Let's see what happened. So we don't give the retracement to the 50%. So this was a missed trade. And at here, we just cancel the limit order. So this was a missed trade. We did not take it. Now we're in between. We're doing nothing until we're above or below both. We still see nothing here. So this could be a potential loser trade. This could be a loser one because what do we have? We have weakness and we have a closure below. Now, maybe I'm not going to take this one and I'll show you why at the end of the video on the tips, but you could have sold this one and it's going to be a loser. Okay, so this is a loser. Now playing the price action, let's see. We're in between and then we start going higher. We're above and then the session ends. So this is a full week of examples. So simply having two lines and having specific windows to trade and looking for weakness followed by confirmation. We enter from the 50% and we go from there. So let's talk about the extra line, which is the one that's going to be on New York. Now we have the two lines. These are the major ones. However, if you want to have more opportunities or I'll say more refinement when it comes to the New York session, you can use this. Now, these are the examples here. The timing is going to be for New York. Now, for example, here we have midnight open. Okay, this is one that we did not go over. And then we have the 17. So 17 is around here. That's the daily candle open. Now, when New York starts, and specifically at 7:30, we have a new line. The 7:30 is here. That's the open. So the new line is the 7:30. Now we have three lines. I would say if price is above all or below all, that means we have potential setup. But if price is below both, we could also have another setup, but it's less probability. You know, it could give you more opportunities. So 7:30 here and then midnight here. Below both, we could have opportunities to buy, and above we could have opportunities to sell. So if we add that one, for example, here 7:30 is around here. The 7:30, this is the open. Now notice how price was below both here. So this becomes higher probability on New York. So you'll be taking longs here. 730 is also here. And now price on New York is above the 730 and we sell here. So it actually gives you more refinement when it comes to New York session. And also here, 730 is here. So when price is above, we're going to be selling on New York. Now, not every time we're going to have opportunities. Yes. For this day, for example, we're 730. 730 is here. If we go below and have an opportunity, I'll be selling. Now, even if the 17 is far away and we have 730 is here, for example, actually here, and we have midnight is here. If price started to go lower below both lines and the 17 is far away, I would still buy from here going higher. So it is just an extra line, but you could stick to these two. The third one is just another refinement. So let's now go over the 3 tips for even higher probability trades. And the first one is trade in the direction of the daily candle. Now what that means is that looking at the higher time frame candle, because this is a bearish one. Now when it comes to, for example, this day here, if this is a bearish candle, I would really prefer to look for a retracement above the opening price, which is here, the 17, and I'd be selling here in order to have another expansion on this daily candle here. So I'd be trying to sell. Now, yes, there are some opportunities when we have a reversal, okay, but I would really, that's what I'm talking about, is having an entry here, which actually one that we've caught in the direction of the previous daily candle above the opening price, catching the expansion. Now, sometime based on CCT or the candle continuity theory, which I've actually have a full course on in school, we're going to be, so for example, also here, if we look at this one here, notice how this candle was bearish, then we have another bullish candle. Now, if we take the previous candle high or previous candle low, we could actually look for, now because this is a bullish candle, I'd be more preferred to look for longs. But if we take the high and fail to displace above, I'd be then looking for sells. So playing the price action, notice what happened. Okay, we're going lower. So for now, I'd prefer to look for longs here because we're having a retracement to the downside and then looking for price to go higher. Okay, but if that fails, it's all good. Now we go higher, okay, and we're failing to continue higher. So it's all good. But in a perfect scenario, because this is a bullish candle, we're going to be opening here, going lower as a retracement, and then trading the expansion. That's what's going to happen a lot of times. But this is a confluence. If it aligns with what you're seeing when it comes to the weakness and the confirmation, then that's even higher probability. Now, number 2 is focus on weakness into a key level. Now, what that means is that if I want to spot a weakness, so for example, this weakness here, it's a valid one. It's weakness and then confirmation, and we give that a retracement. Is this happening inside of a key level? I would really love to see the weakness inside this imbalance as well. I would like to see this weakness, for example, here inside an imbalance or inside a key level. For example, this key level, a valid one, okay, and I want to spot the weakness there. If you're using supply and demand, you mark your supply and demand and you want to spot the weakness into that supply and demand. Now, one of the easiest way is simply to use an imbalance. As an example here, this is a high, this is an imbalance, and then we have what? Weakness inside imbalance. That's a valid one. What is another one? We have, for example, see, we have this one here and then imbalance below. So what happened here is the weakness. Now, in this case, we don't have a weakness, but let's consider it's a weakness. I want to see the weakness happening inside an imbalance and then reversing, because at this point, we're going to have two things: price having the weakness from the level and then having the strength from the key level, the other key level. So weakness at a higher low and then strength of the key level. Tip 3 is focus on weakness with the structure. Now, what that means is that if I have price going higher, something like this, where do I want to spot the weakness? I want to spot the weakness within the structure. That means because we are bullish here, I'll be focusing on lows to find the weakness, something like this. And then I would be buying here. But if I'm having a better structure, for example, so we have now something like this, where do I want to find the weakness? I want to find it within the structure. So now I'll be looking for this weakness in order to continue lower, because now I'm bearish here within this structure from here to here. And I'm looking for, because now we have high and a low, I'm looking for a lower high and then going lower. So for example, if I have a structure that is bearish, for example, I'll be looking to sell the high. And if in this structure I'm bullish, I'll be looking to buy the lows here, and then having also weakness within the structure. So here, now this is not a weakness, this is just a key level, but I want to see both at the same time. Now, for example, let's see. What I have is I have weakness and a breaker structure. That means this is a high probability range. Where can we sell? I would be sitting at this high, because this high being taken with the structure is bearish, and I'm taking highs where the continuation will be to the downside. So here you can sell going lower, and that's the best way to trade, always with the structure. So at the end of the video, I want to give a special thanks to all channel members, and especially the credited members. Thank you everyone. Make sure to check out Edge School, my community, and my classes, and make sure to share the video, like, and subscribe to the channel, and I'll see you in the next one.